today we are paying our respects to the $500,000 investment property because it is nearly long gone to the world here in Australia. So I want to have a bit of a conversation because we get asked this at an advisory level all the time. Affordable properties obviously can really help in terms of fitting in with clients' budgets, but it's a question is, are there still $500,000 properties left across the country, and if so, where are they? So I want to bring up the Ripe House tool at the moment, but I guess to give you some insight before we get into that. So it's kind of no secret, when we very first started as an advisory business, we were purchasing quite a number of properties in that $300,000, $400,000, $500,000 price range, but progressively over time, the median price of the properties we purchased have continued to go up. So as of 2022, we were kind of around that circa $440,000 price point. We are, as it sits right now, closer to $480,000. So as you can kind of see here, we are on the precipice where our median price is actually going to be above the $500,000 price point. We may already be there. If we run maybe February's numbers, we probably will be there very close. So we want to have a bit of a review, and if they're still out there, where are they and how much longer do we actually have to go about them? So I'm just going to bring up the data tool here on the screen. So if you're new to the channel and you're not familiar with what we're looking at, we are looking at Ripe House's back-end data and AI algorithm. It's independently looks at over 15,000 suburbs across the country, runs them through a myriad of data factors with all different individual weighting scores and relevancy to what we form as our R score. So the R score is a capital growth indicator based off that data and AI, based off those data factors. Heavy weightings though, considerably to proximity to utilities and amenities, into population growth, yield price movement, and how it's going in comparison to the sale prices versus certain area averages. So I want to walk through that, and just a bit we've already put a filter on this one. So normally it's about 15,000 plus suburbs that are sitting in it at this point, but we are looking at suburbs below $500,000 with an R score of 80 cent or above. We want to be looking at the top 20%, and we also don't want to be any more than a 3% vacancy rate. So that has left us with just on 203 suburbs across the country. So you might turn around and say, that's fantastic. There's still 203 suburbs out there. There's quite a lot of locations for us to pick from. But I should preface that at this stage we are at right now, we're not actually looking at the verified approved suburbs, because we start at our approved locations, and once we get to the top 20% or more, over 80% of these suburbs fail. So if we run the numbers on this one, just a bit of quick maths, we're basically talking about there are 40 suburbs or so, give or take, of approved locations at that sub $500,000 price point. Now, how long will they last for? We can't be quite sure. I would anticipate the next 6 to 18 months, it's going to be quite challenging to be getting into that sub $500,000 property. You will still be able to do it, but you will be severely limited into the locations you'll be able to make that happen. It's most likely only going to be in regional centres, primarily speaking. Probably Queensland's looking like the strongest indicator right now, but that will eventually run out. They will go through a growth period. They normally go through these big aggressive growth spikes over a kind of 24 months to 60-month period. And then you're priced out of that market, and then the yields come down and it's not as attractive to investors anymore. We have to move into another market. So we've still got properties out there, and I would say the lowest we find them at the moment in approved locations is around the early to mid $300,000 price point, but there are not a lot of them left. It's not something that's coming through with dozens of listings per week. It is definitely in the single figures. Most of them fail our vetting process, and there isn't a whole heap in that kind of $400,000 to $500,000 left. Absolutely zero left in capital cities. So if you are looking to get into an affordable property, unfortunately, the window of opportunity is closing. And particularly in 2024 and early 2025, you are going to see, and we are already seeing it, increased confidence coming into the market, where first home buyers are starting to come back to the market. Investors are really coming in through their droves since late September last year. So that is going to push the property momentum forward, and this price point is going to disappear really, really quick. So I would implore, in particular, first time investors out there, you don't have to enter the market at a $600,000, $700,000, $800,000, $900,000 price point. You still can get into these affordable suburbs, which are not going to have a dramatic impact to your cash flow, whilst you allow yourself to learn, and it doesn't impact your lifestyle. But you do need to act quick. So if you'd like to know more, please click the link below. You can speak to one of our team. I'd love to get your thoughts out there if you're following along. Please leave a comment of what your thoughts are. If it's in Townsville, Cairns, Mackay, no secret, we don't buy there. We don't buy in flood, cyclone, tsunami impacted areas, but would love to get your thoughts. If you haven't already, make sure you hit that like button, make sure you're subscribed, and we will catch you on the next one. Bye for now.